take a maximum of maybe 50 or 60 minutes, so that by around 1 p.m., between 1 p.m. and 1:30, at least we are shifting our gears back to our personal schedules. For those who will not be in a position to join us fully, I want you to know that we are having the session recorded live on YouTube, whose link I'm going to share in the chat section, so that at your own convenient time, you will be able to use the link and listen through the session from first to finish. And before I welcome our expert speaker to lead the discussion and do the presentation, I would also like to set a few ground rules that will help us be able to conduct ourselves well. Number one, we do recommend that you mute your audio, because since we are joining this session from different backgrounds, some noise from where you are can interfere with those who are listening. So please mute your audio. Unless you want to speak, you will raise your hand using the user interface feature on Zoom, or you can use the chat section to type your concerns or questions, which will have other experts in the house and other people respond to it. We also recommend that you utilize the chat section, especially if you're not in a position to speak, and ask your questions or your concerns. So with that, I would like to officially welcome all of us. I can see we're approaching 30 people and counting. So this is a good number for us to get started. The other people will join us on the way. One last thing to note, we will be giving continuous professional development certificates to everyone who has attended this session. So kindly ensure that you sit through the session, because I will post on the chat section a unique code that you will use to generate and download your CPD certificate for joining this session. You can use it to add your CPD points to your professional development initiatives. So with that, I would like to recognize the presence of our speaker, CPA John Okumu, who I will allow to introduce himself and speak a bit about his profile, so that we are aware of who is going to lead us through this discussion. And for other experts in matters finance and government issues, you are free also to help our expert during the discussion by giving your expert opinions and views on how this topic affects all of us. So CPO Okumu, if you can hear me, I think you can confirm if you can hear me, and then you can take over the session. In the meantime, we welcome all objectives. If you have any expectations to learn through today's session, use the chat section. Just type anything you expect to learn from this discussion, so that as CPO Okumu prepares to start, we can skim through the chat section and pick the points you expect to learn or the things you expect to be clarified, so that he can tailor his content to suit your expectations. With that, I think CPO Okumu, we are ready. You can now take over by introducing yourself and then sharing with our audience. Thank you.
Oh, thank you. Good afternoon. I want to say thank you, my brother, for welcoming me. I can see there are quite a number of people on board. And we'll start with my introduction. I'm CPA John Okumu. John Okumu is a tax consultant and also auditor. I've also been training with a number of years of experience in public sector and private sector. So again, for today, we'll be able to share when we talk about the budget 2023-2024, what are some of the implications for the socio-economic development that we want to pick today. And we are talking about the finance bill. There's been a lot of debate and there are a lot of interpretation. So can we together then understand what is this finance bill 2023? What does it carry for us? And how is it going to affect us as a professional, as common wananchi, and as citizens of the beloved country, Kenya? So this is what we want to share. for the next few hours. I want to also to confirm, are you getting me, CPA? Hello?
Yes, you're very audible, at least from my end, you're very loud and clear.
Yes, that is one thing I want to test. And because of the technologies that we are using, we need to ensure that at least we are connected. At times when you are speaking to audience who are all over and everyone is muted, you could be talking and the internet had gone so long that you may not even know. But I hope that there will be stability in the internet from where I am and to all of us. So I want to welcome all of us into this session. And yes, as you said, if there are other issues we can note, and then we'll have a session of QA that will be again guided. Any other thing, even you can always also write. I can see there are people who already started writing there. So yes, feel free, write something, and questions and answers will come at one point. So we are supposed to go up to 1:30.
Yes, at around between 1 p.m. and 1:30.
Or between 1 p.m. and 1:30.
Yes.
Okay, we are at 14 minutes into time, because we were meant to start at 12. So all the time we will start, and let me try to bring my screen for sharing. Wow. Yeah, so that is what we expect to do, and I hope the session will be more interactive. Let me try to bring more. Okay. Right. So confirm if you are able to see my screen.
Yes, CP, I can see your screen at least from my end.
Yes. Yeah, so again, I said we want to look at the implication for the socioeconomic development and the winners and the losers. And the emphasis will be on the Finance Bill 2023. And as I said, there are a lot of debate out there, and this is what we now want also to get into, so that we get what is the clear position of this, other than the interpretations that we get from the newspapers, what we hear from others as well, and what we've read also are also out there. So we just go straight into this. And then again, those are what I'm presenting is on the annual budget 2023, the implication and the rest. Those are the content which will come at the end. But before we get into this, let's look at the global economic outlook. I'll try to be as fast as possible because of the time, but I want us to pick on key issues that we would want to discuss. But what we are saying, the global economic outlook is uncertain, again, amid financial sector turmoil and high inflation, ongoing effects of Russian invasion of Ukraine, and their 3 years of COVID. So what we know is that the economy in general, outlook worldwide, there's been a lot of uncertainties. One, it started with the COVID, which disrupted us, and then there was a very significant impact in the global economy, causing disruption in various sectors, leading to job losses and reduction in economic activities and expansion. And then I've talked about the wars, the Russia's invasion of Ukraine. This one again brought a lot of imbalances in terms of world economics. Then we are saying that, however, with the rollout of those vaccines, thanks to that, the vaccine came and now things get better, and we are hoping that the economy will recover in the near future. We've looked at some baselines, studies by IMF, the reports. They are forecasting for the growth to fall from 3.4% in 2022 2.8% in 2023 before settling at 3% in 2020. So that tells you that due to the factors that I've listed a few, we are saying that this economic growth is expected to fall from 3.4 in 2022, then 2.8 in 2023, and then it will settle. By 2024, things will be better now that we are in the recovery track. So we are hoping that things will get better. The recovery is, however, not uniform across regions and countries. As you know, not all will heal at the same time. So we are saying those like the US, the Europe is expected to recover faster compared to emerging and developing economies. So we are in a economy which we will still continue struggling for it to recover fully. So that is expected to be seen around 2024, thereabout. Again, we are saying significant factors affecting the global economic outlook. Those are trade tension between major economies. You see now when the big ones are fighting, then the people who are below them are the people who are suffering. So there's been some kind of those tensions out there. I want to say that for us to be talking about the finance bill 2023, there must have been a budget. The budget now, normally we have a budget policy statement, which is normally provided by the CS Finance to give a guidance on what does it that we are focusing as a nation. So the budget policy was given, and this one gives it contains us assess the current state of the economy and the financial outlook with respect to government revenue, expenditure, and borrowing for the next and over medium. So it proposes expenditures and then a fiscal responsibility and statement of specific fiscal rates. So what are now the focus? They are focusing on about 5 thematic areas which the government, the current government is focusing on. They are focusing more on agriculture, micro, small, medium enterprise economy, housing and settlement, healthcare, digital, superhighway. So when you look at this is what now the thematic areas which now the current government is focusing on with the budget of 2023-2024. So you look at, you'll see that more of emphasis are laid on the 5 key thematic areas. And then we are saying agriculture remains highly dependent on agriculture sector, contributing over 2.1% of the GDP. That is why the government is putting more focus on agriculture, and it forms about 65% of Kenya's total export, has the highest employment multiplier in the economy. So look at agriculture in terms of GDP, look at it in terms of employment, look at it in terms of the food that most of us depend on agriculture. So that is why the focus is here. And this one has been slowed by the COVID, which affected us between 2020 and 2021, mostly battle of 2020. So that is why the government is saying, let's focus more on agriculture. Then again, the other focus the current government has is on micro, small, and medium enterprises economy. This one, they again contribute. They realize that it contributes very significantly to the economy, employing about 80% of non-farm jobs. Credit is stimulants that enhance growth in SME. However, interest rate crowd out of the private sector. So we are saying that this is another sector, and as you know, commonly referred to the Juakali people. That is where the majority of us are, and the government is saying, yes, we need to think about these people. How can we enhance their businesses? How can we make sure that they have the capital to do the business? And how can they be assisted in terms of their business? So the focus again is on them. And then the other thing which also has brought a lot of big debate is on the housing and settlement. So again, the government is saying we need to do something on the urban housing settlement. The government plans to close the housing gap by the delivery of 250,000 houses per year. To realize this, the government will implement a policy and reforms to lower the cost of. So the government is thinking of doing so more houses to help have modern and support the gap that is there. So then again, in the rural world, they are thinking of doing some, again, the establishment of a settlement fund, similar to one that was used to acquire land during settlers. So again, they are also going to do something. I listened to others say that they're focusing constituency based. So they will be doing quite a number of around 200 per constituency. Yes, something like that in a year. So we are waiting to see how this will come and how it will. So again, those are the focus that they come. Then again, the health, they are talking about access to quality and affordable healthcare is critical. So this is also another area which the government is focusing. Next 1 year, they are saying that they want to focus on improving access to quality and affordable healthcare, which is very, very critical. And then they're talking about traditional digital superhighway. Kenya is a strong leader in information communication technology space. Appropriate policy framework and is being put in place to address some of these issues and also to enhance that industry. So there's also something they're thinking around superhighway. Now, those are some of the economic outlooks that I wanted to share with you. And as we go into the highlights of the finance bill, then you look at where the government is coming from and why are they making this kind of proposals to raise revenue. Those would provide us with a base. And as you are aware, the finance bill was already tabled to the National Assembly on 4th May for the first reading. Proposals of the bill are significant and may have an impact on the business. Several taxpayers, include you and me, are going to be affected in one way or the other. As a professional or as a consumer or whatever you do, you will be affected in this one way. So that it appears that the National Treasury is continuing policy of revenue mobilization by increasing tax rates, expansion of tax base, and real-time collection. So when we talk about the increasing tax rates, it means that the government want to mobilize more funds either by increasing the current tax rates that we have from one point to another point. That would be what we are talking about, increasing the tax rates. Then the government is talking about expansion of tax base. Now, when they're expanding, it means they want more people. So they want more people to come on board, and we will see that they are doing recruitment and they are moving around. Even right now, mostly where I am, I can see most of the Kenya Revenue Authority staffs are out there with pens, mobilizing people to come and file their returns. Those who want to register can also get access to registration. So that is to do an expansion and then real-time collection of taxes. So they are saying, instead of waiting for a longer period of time, why don't we start collecting immediately? So they are proposing that you collect even by 3 days. Then they are saying, as the matter is still in court, why don't you pay a certain percentage so that the money is with us? So those are some of the things that they are thinking and that they can do to make the tax administration better. I want to get into the issues that are there. Because of time, I've just picked specific issues that I want us to particularly form part of our discussion for today. One, you will find the turnover tax, what is father's thought. What we have is currently allows resident person with a turnover of more than 1 million, but does not exceed, is not expected to exceed 50 million during any year of income to elect turnover tax regime where they pay at a rate of 1%. Okay? Those receipts. You'll note that this is what is current, but there is a proposal that this be increased from 1% to 3%. Now, while dropping in more micro businesses to the tax net by lowering the entry point to cover businesses with a turnover of 500. Now, the turnover now has also moved from 1 million to 500, and then the ceiling has been put to 15 million. Now, the maximum is now moving to 15 million from 50 million. Remember, again, the tax has been at 1%. Now, the proposal is that we have it at 3%. Then they are saying they are lowering it from 1 million to 500. This is just to bring more people. That is about the TOT. And then the upper band, meanwhile, moved from 50, I said, to 15 million, which we see businesses with turnover above 15 million paying taxes on profit, income tax at a rate of 30%. Previously, those who were within 1 million to million and elect TOT would only pay 1% of their total sales as a tax. But now the threshold has been now lowered from 50 to now 15 million. So meaning those who are above 15 million now pay at 30%. That is what is being proposed. And we are waiting to see how is this going to affect the common businesses with low income mostly. But that is what is being the effect of tax will remain more. Micro business now be subject to the past duty. This is higher rate. You can see. So that means more people will come on board. And then they're saying the more the people, then the lesser the burden. So that is the proposal. If we are going to be able to enhance the 5 thematic areas. Then what is again new here is electronic tax invoice. Currently, businesses expenses are deducted as long as they are incurred only and it's exclusive in the generation of income. So what you normally have is the expenditure, which the invoice, the payment, and all these things are filed together. And by the time you are doing your tax returns, all those expenses are considered, whether they were part of VAT claimed inputs, they would still be claimed. But now the bill proposes to introduce a condition that for a business expenses to qualify for tax deduction, invoices received in respect of such expenses must be generated from an electronic tax invoice management system, unless the transaction under which the expense card has been exempted from electronic tax invoice management system regulation. So as you can see, the teams is here, and we have now the e-teams, which we are being moved to right from September. And then again, people were given more time up to around December. Now we are saying full rollout of the teams. And what this means that if you are not in the e-teams, then those invoices which have not passed through e-teams will never be part of the income tax allowable expenses if they were not. Then the bill also proposes to introduce section 3A to empower the commissioner to establish an electronic tax system for issuing tax invoices and keeping records of stock, where so established business people, including resident person and PEs, must issue invoice or maintain stock records on electronic system. So again, the stock management is also, again, is proposal here that the commissioner to establish an electronic tax system, issue tax invoices and keeping records of stock. So those ones are also proposals that are very silent in the discussion, and the major focus are the ones which the politician will always pick and talk about. But these silent ones, these ones will go and pass without us noticing. And when now the implementation comes, and that is when now you will now say KRA is bad. But now the opportunity given for us to interrogate and give our opinion on the same, and our memorandums as part of public participation, which I think we did quite well. We know people shared their memorandum, and it was good. So issues again on penalty for failing to comply with electronic tax system. So as they introduced this, they are also talking about section 86 of TPA, provides that where a taxpayer fails to submit a tax return in electronic form or to pay a tax electronically are required by tax law, they are liable for a penalty of 100. So that is what now currently is in the TPA. But what is being proposed, current penalty is 100,000, but now what is being proposed is 1 million or 10 times of the tax due, whichever is higher. So this one again, they are proposing to move the penalty higher, and also that you are charged either 10 times of the amount of the tax due, whichever is higher. These are some of the proposals. Again, VAT on compensation for the loss of taxable supplies. This one has also been common in the debate out there. And people have already talked about it a lot. But this is the position on this, the introduction of VAT on compensation for loss of taxable supplies. Bill proposes to introduce as subsection 8 to section 17 of the VAT Act as follows. Where a bona fide owner of a taxable supply who has deducted input tax compensated for the loss of the taxable supplies and shall be treated as so where you acquire, let's say, asset, and you've already also claimed the same as part of your inputs, and an eventuality of maybe loss and then compensation, then now the taxman wants us to also get share of that compensation. So that is what they propose on here, that as the insurance pay compensate, then now you are also expected to pay VAT on the same. That is the debate around interest, restriction, foreign exchange losses, deferrals. Finance bill now proposes that non-deductible foreign exchange losses can only be carried forward for a maximum of 3 years. Within those 3 years, foreign exchange losses should only be deducted in here where the company interest. The restriction threshold, IABTDA. Interest incurred from loans from residents will no longer be subject to restriction. So again, we've been talking about what are some of the gains and what are some of the whole process. You'll find as we move along, there are those who we are saying are gaining, and there are those who are losing. So again, we'll get to the summary part of it. Intellectual property income. Currently, income from intellectual property is subject to tax at a rate of 30%, or 7.5 for branches. The bill proposes to introduce a preferential tax rate to qualify intellectual property income. No definition of the qualifying intellectual property has been provided, and neither has the preferential rate of tax has been provided. Now, there's just a proposal. They have not decided on what is the rate, and now they have not even given the definition of what qualifying. So again, those are some of the gaps we have seen, but we are waiting to see how they handle this one. Sales promotion, marketing, advertising services. Introduction of withholding tax on payments to residents, persons in respect of sales, promotions, marketing, and advertising services. Currently, withholding tax is not applicable in respect of payments to resident person, in respect of sales, promotion, marketing, and advertising services. The bill proposes to use 5% withholding tax on payments to resident persons in respect to sales, promotions, marketing, and advertising services. It's also another proposal, which is also marketing and advertising. So these are some things that we need. Some as practitioners, some as also those who are also advisors, witnesses on issues to do with this. So you need to take note of that. Sales, promotion, marketing, and advertising services bill proposes to increase by 5%. So if this bill goes through with those proposals, then you need to advise your plans that sales, promotion, marketing, and advertising costs are subject. Then offsets of overpaid taxes again existing liability. And also, for some time we've been talking about how we get our refund. EKRA pesa ikiingia itoki, what is happening? So that one has also been a debate. Say that, okay, they say just apply for a refund, but it takes years for that refund to come. So what are they proposing now? The current position is under section 47 of the TPA allows taxpayer to apply for a refund of overpaid tax within 5 years of the date which the tax was paid, provided that the overpaid tax can be offset only against future taxes. That is the current position. But now section 47 is proposed to be amended to provide for offsetting overpaid taxes against outstanding tax debts and future tax liability. Where a taxpayer opts to apply for a refund of taxes, the bill proposes to reduce the time period within which the commissioner must refund the taxes from 2 years to 6 months. That one I think is also another again, if it can entered, again the taxpayers or the business people, or again get a relief in terms of the cash flow, because some of these refunds takes many years before they are funded. And if the proposal goes, then it can be used. Then I think that if the commissioner fails to refund the overpaid tax within 6 months, the amount would be applied to offset the taxpayers outstanding or future liability. The bill also proposes to provide where an application for refund has been subject to an audit, the commissioner and determine the application within 120 days. Failure to which the application can be deemed to have ascertained an application. So again, if there is an audit on the refund, then the KRA, the commissioner, is given 120 days to finalize. Failure to which, then it will be deemed to have been ascertained. Again, that is also another good proposal, and that is going to be again to the people, because if it's an endless audit, we are still reviewing, then the cash flow is affected, because again, you need that very cash. So I think that is also another again, that if it goes through for us. MRI, the current withholding tax rate is at 10%. This is on the rental income. Those who have rental income, those who are paying, they will be paying at 10%. This one, now there's a bill proposes to rise MRI rate from 10 to 7.5, and this is a welcome move again. So this one again is just to bring more people on board, because when it was 10, maybe some people were scared that they're saying, oh, you see, we have other things to do, maintenance and all these other things. But now the proposal is that we have it reduced from 10 to 7.5. This is a welcome move and encourage more. Okay. Again, withholding tax, introduction of withholding tax, rental income collected by agents, still again on the rental income, who have been appointed by the commissioner. So again, previously we had those who are appointed to tax withholding agents. Here they are introducing withholding tax rental by agents who have been appointed by the commission. There is a proposal, section 2, to empower the commissioner to appoint an agent for the purposes and remittance of tax to commissioners, especially those what we call the property managers, property consultants, those who collect rent of their lands. So the commissioner proposes to be able to appoint those people as agent collection and remittance of rental. And the bill proposes that a person who receives rental income on behalf of the owner of the premise shall deduct tax therefrom, provided that the only a person appointed by the commissioner in writing for that purpose. Yeah, we've had incidences where people withhold that they are withholding 10% remitted to the commissioner, but they fail to do so. Some of them are not even appointed agents. So the bill proposes that only those who will be appointed are able to. And this appointment must be writing. So if you get someone who is deducting the only withholding, then the first question, are you a withholding agent? You have a certificate of withholding agent or an appointment letter, which normally the commissioner does. So that would be another way of helping. They would be required to remit the tax within 24 hours after the deduction. So look at that again, timeline has been set for them that you withhold, but then you must make sure that you must remit it within the proposed amendment section 42A now require the amount withheld by purchasers to be made within 3 days after the deduction is made. Again, we are looking at the withholdings on the companies who have been appointed as withholding agents. So for the purposes when they purchase their purchases, they are supposed to withhold. And then when they withhold, they are supposed to pay within 3 days. Some withhold and then stay with this money for about 1 month before they even remit. Some even go after 2 months, the same money. So it is like you are loaning yourself in a way and the Kenya Revenue Authority need that revenue yearly, and there's like withhold and then 3 days. So that is, you've been given 3 days to do so. Failure to which there are also consequences. But it is the money you are holding on behalf of the commission. So you are given a timeline of 3 days. Failure to which, then you are in a problem. And then again, the withholding from the purchases, again, I want to remind you, is only those who have been appointed as withholding. So the commission normally appoints withholding agent. So if you are a client or a company where you work from, is a withholding with a certificate or a letter appointing them as a withholding, is when they can withhold from the purchases. And when you've been appointed, you must withhold from the purchases. If you don't withhold, then there are those consequences. Digital assets tax. The bill has proposed to introduce a digital asset tax at 3% levy on the transfer of charges applies due to the exchange of assets, which cover cryptocurrencies, and fungible tokens. The levy is applicable to exchange which host and hold digital assets, while the proposal is expected to raise the cost of transacting assets, which also held a low anchoring interest assets, where at least 4 million Kenyan currencies carrying multiple such findings. So then we are saying the government is seeing there are so many opportunities that are coming because people are talking about cryptocurrencies, digital currencies, and tokens. So those are then the areas which the government is proposing to boost access, and this will help them to boost the revenue. Digital content creators, again, there was also been a lot of debate around this by the digital content creators. 15% of payment made to digital content creators will be withheld, with taxpayers making the payments being required to withhold the tax. The bill also provide a wider definition of editing. So the digital content creators will also subject to 15% withholding. And that is, again, another issue here, which there's been a lot of debate on content creators. If they also sent a proposal or a memorandum on over the same public participation, something. Again, we talk about the employment taxes amendments. Now, these are what now affects the employment. One, we talk about pay. How is it been affected? We are saying a 35% tax ban for earners above 500,000 per month. The bill has proposed to net more from higher income earners by pay a tax ban at higher 35 for persons whose gross monthly income is about 506 million annually. So again, this is going to affect those who are earning more. And I don't know whether the MPs who are in that bracket will also be loving to have it. But that is what they propose, that those who are earning more should pay more. So they have given them a higher rate of 35%. So that one, again, we are waiting. It's a proposal there. Now where you now start finding the losers. The losers in the respect that this thing is going to go take more money from the pockets of the people, and this will leave them who are in that best to have the implication of living netting from high income earners while having the possibility of paying individual net tax pay home. So yes, they are going for the higher. Then the other issue is on mileage reimbursement. This one also is very common, but again, very controversial because the tax-free treatment of amount received by an employee from their employer as a mileage reimbursement. The bill seeks to amend ITA, Income Tax Acts, by introducing a new paragraph, that is 5(2)(a)(4), to provide for tax-free treatment of mileage reimbursement. That is also another again for those who are working for the government, and they will be able to be reimbursed. And It's on mandation to use tax-free from managed employees who receive when traveling. Yes, this one again, we are saying if the reimbursement for staff is on the mileage, and that mileage must have been the standard mileage rate approved by Automobile Association of Kenya. You don't just say it somewhere and decide that between this point, which is 5 kilometers away, I'm charging 10,000 as a reimbursement. No, there are always rates which have been provided by the Automobile Association of Kenya, Kenya. They always provide the rates that are applicable per kilometer. So if you know that, you can always ask the AA to provide you with the mileage charge rates that has been approved. So the tax proposes that proposal is that there will be free treatment. So where you are reimbursed, no tax, no 30% is subjected. Nowadays, any allowance is taxed. Tax treatments for the club entrance and subscription fee. Again, this is also another one where we need to take note of. We are saying that the treatment of club entrance and subscription fee paid by the employer on behalf of one employee. Before, either the employer makes those subscriptions on their behalf. But now the taxman proposes otherwise. That section 1625 of the income tax provided, club fees, including entrance and subscription fees paid by the employer on behalf of an employee, are not deductible expenses pertaining of the taxable corporate. So again, there's a proposal that those should not be deductible expenses. Then the bill proposes to delete section 1625 of income tax and introduce a new paragraph 52FA to provide for taxation of employee in relation to club entrance and subscription fee, which have been disallowed against the employees. So the employer was not able to claim. Now they are saying not only disallowing, but now they are supposed to be taxed on the employee. So the employee is supposed to be taxed on that which has been made by the employer. Fish which have been disallowed against the employer. So that is what the is. Reimbursement of expenditure. This is very common again, where you will travel from our places of work and then you go out there, you will come back, you ask to be reimbursed for the expenses that you incurred in the process of official duty. The bill seeks to amend income tax by introducing a new paragraph to provide that any amount paid or granted to public officer to reimburse an expenditure incurred for the purpose of performing official duty shall not be taxable on the public officer, notwithstanding the ownership or control of any asset purchased. This provision introduces inequality itself because it's talking about the public officers. Now the question is, where is the private sector in all these things? But what they are saying, public officer, and we know the definition of a public officer. So then it means if we incur expenses as a public officer, then you are reimbursed. And then now you are not supposed to be on the same. Those are reimbursement and that's now then they are saying it is a public officer. The question is, where is the private sector? That is why we are saying this provision is an inequality in the tax treatment of public officers or employees. So private sector is not covered, and that I believe they must have also seen and presented during the public participation their views over the same. Moreover, the administration of tax on amount received by employee, as per him, the income tax provides a tax-free limit of 2,000 per day, and any private expenditure can using such amount is taxed employee. So again, if that one is going to the proposal is going to reverse the 2,000, allow for those reimbursements tax-free, but now for the public officers. Now we are still waiting to see how that is connected, the private and the public. And then the National Housing Development Fund, which has also brought a lot of heat and debates around is also here. We talked about among the 5 thematic areas, we are talking about the government thinking of the housing and settlement as one of their major focus for the next 1 year in this current financial year. So again, the 3% housing levy deduction, the bill proposes to introduce a new housing development fund, 3% of those earnings. So this one again will affect us because the 3% is based on our gross, on our basic salary. So the basic salary as an employee, you 3% of your basic salary, and then the employer also is supposed to pay 3% of your basic salary. So then whichever is higher, but the maximum is 5,000. So again, this is coming, and this one has brought a lot of say the employees contribution at 3% of the employees' monthly basic salary, and then the employer also does the same, provided that the sum of the employer and the employee contribution shall not exceed 5,000 shillings. So whichever is higher. So if the contributions by the staff and the employer exceeds 5, then the maximum is 5. So if it is lower than that, yes, then does not. That is what the deduction become. The benefit to an employee shall accrue as follows: for employees who qualify for affordable housing, the contribution of the employee and shall be used to finance the purchase of a home and affordable housing scheme. 2, for employees who are not eligible to affordable housing upon the expiry of 7 years from the date of start of making the contribution after the attainment of retirement age, whichever is earlier, the transfer of their contribution. Those are the things. So those are some of the things that if the proposal goes through, that those are some of how the employees will benefit of this. And this is also, again, another debate which is there, that yes, you are taxing 3% from our basic salary. And again, some of us are rural, we are staying in homes, and we already have our houses. So why do you want to tax us like this one? Housing. So those are the debates that are around, but again, I will also open it for also inputs and debate around it. So then VAT, again, we are talking about petroleum products. The bill has proposed VAT on petroleum product to be applied at 16%. That one has also been in the market. It has been out there. People have been talking about it, and we are saying the 8% was introduced, but again, it was not that. And now the proposal is 16% from the current rate of higher, current rate of 8%. And look at the fuel cost. Fuel cost has got ripple effects on most of the things, also in transport industry, and most of the things that we consume depend on transportation, where now Mama Boga will feel the effects. Even though it's not going to affect only those who are motor vehicles, this thing is going to cost everybody. And through this, people will realize that the cost of things will have gone up, the cost of basic food will have gone up because of the element. And the daily transport, work again, public transport, the prices will go up. So we have kind of effect. And again, we are saying on the contrary, the supply of LPG, we are saying would fall in the tax exempt category, removing it from the current taxable status. So again, there's a proposal that LPG, that is the gas commonly known, proposal will affect lower the cost of LPG, making it more affordable. So those who will be using gas will get it cheaper. And those who are using kerosene as a means of lighting and for cooking, again, they will be affected seriously because 16% getting less. Right? So that proposal is also out there, and there has been a lot of debate around it. So, that VAT on petroleum product will go up by 2% from 8%. and then the LPG gas is already proposed as a tax exempt category. That is what we expect. VAT registration, we talk about VAT registration for imported digital tax services. The bill has proposed to delete the threshold that require non-resident firms to register for VAT if their annual turnover exceeds 5 million. That is also something that's coming for those who have resident clients. You can also advise them according to those changes. This means that all providers of reported digital services must have it. That is all that. VAT exemption export of exported taxable services. This one again has been there. I think prior 2021 it was under exempt. 2022 they were brought to tax, and that one brought a lot of issues. So now the VAT Act provides for the standard rating of exported taxable services 12%, except for business process outsourcing activity, and listed in the second schedule. It proposes to give the distribution of taxable services from the second schedule to the VAT Act and to introduce the question of taxable services in the first schedule. It also proposal to exempt exported services from VAT 6 to correct the negative effects introduced by the Act. So again, we are saying they are proposing to exempt. Otherwise, I would say that those who are in business of transport, especially those who are transporting, exporting the services, must have faced it. And roughly, there was a lot of even confusion. It was not clear because when we read the Finance Act 2022, it talks about the taxable services. Now they're making it more clear. What they are saying now, they want to exempt airport services now to an exempt. So that is again on that VAT exemption. Diagnostic laboratory reagent, vaccines for human and veterinary medicine, aircraft and aerospace part. Those are exempt. Removal of the blanket income tax exemption applicable to companies undertaking the manufacture of human vaccines. So the bill proposes to remove the income tax exemption from companies undertaking the manufacture of human vaccines that is related to their corporate tax rate of 10%. So just that blanket, but now they are proposing that this company should pay corporate tax at a rate of 10%. Further, the bill has introduced withholding tax exemption, which will only be applicable to royalties paid to non-resident persons and interest paid to resident and non-resident persons. Exemptions, again, the bill proposes to exempt various goods. Those ones I've talked about, you can see there are quite a number of them. Most of them are diagnostic, laboratory reagents. Then other medicaments containing hormones, other products, those are again sorts of exemptions. This was capital allowance for industrial building and docks. Bill proposes to include capital allowance at a rate of 10% for industrial buildings and docks. Industrial buildings have been defined to include buildings in use for purposes of transport, bridge, tunnel, inland navigation, water, electricity, hydraulic power, and electric. Those are some of the things that are there. Civil works and other structures related to the equipment, even over the same. Advanced tax is also another one which key to us and which we need to note. The increase of advanced tax applicable for vans, pickups, trucks, prime movers, trailers, lorries, saloon, station wagons, minibuses, buses, and coaches. The advanced tax is currently 1,500 shillings per ton of a load capacity per year, or 2,000 per 100 shillings per year, whichever is higher. For saloons, station wagon, minibuses, and all the rest, tax is 60 shillings per passenger capacity per month, or 2,400 shillings per year, whichever is higher. But now the bill proposes to increase the advanced tax to 3,000. Now the bill proposes to remove it from 1,500 to 3,000 shillings per ton of load capacity per year, of 5 or 5,000 shillings per year, whichever is higher. For saloon, station wagon, minibuses, and coaches, the new tax rate is 100 shillings per passenger. So that means now for those who are in the matatu business, what it means to you, you used to pay 60 shillings, now you are going to pay 100 shillings per passenger capacity per month, or 5,000 shillings per year. So if you are in a matatu of let's say 25-seater, then you multiply by 100. That is what it means. Excise duty, timely excise duty payment. Yeah, we talked about timely payment. The bill seeks to empower KRA to obligate certain firms in certain industries to pay excise tax instantaneously. Players in gaming industry are, for instance, required to remit excise taxes within 24 hours. Within 24 hours. The proposal is expected to reduce the cost of compliance. And on flip side, KRA is set to see improved liquidity from the instant deferral of tax levy. So those who are in gaming and industry are expected to pay within 24 hours. Other new excess good added, cosmetic. Hapa sasa, kila mtu amepata. Cosmetic, human hair, wigs, false beards. Yes, men with false beards, you are going to pay more because the taxman is coming for you. Those with the wigs, the hair brows, hair lashes, artificial nails. So anytime you see someone with artificial nail, just know the cost of that artificial nail is inclusive of VAT. So this is what the taxman is proposing. It will begin attracting excise duty at a rate of 5%. There is an excise duty on that false, what we call the false beards, the eyebrows, the eyelashes, things. So the taxman is coming for this. Imported fish. Yes, we have fish coming all over, imports coming all over. And so the taxman is saying he must get a share on this. So he's saying the imported fish at 100 per metric ton, or 20%. Powdered juice, 20% imported cement, those ones. So there's fish, there's powdered juice, all those imports will attract some excise. Increase excise duty rate, mobile money transfer services, 12% to 15%, creating a likelihood of increased mobile money charges by telco operators. So it is being increased from 12 to 15. Gaming, betting, prize, competition, lotteries move from 7% to blanket 20% with the aim of raising tax net income. So it is seriously moved from 7.5% to 20%. So the other new, this one, digital loans, any amount charged in process of loan issuance by digital, yeah, there's a lot of digital loans, and every now you see those adverts on your phone asking you, nataka pesa, nataka pesa. Now, it's also a business. Now the taxman is targeting them that any amount charged in the process of loan issuance by digital lender will be the subject of this duty, maybe that's 20%. So that interest that you pay will also be subjected to this duty at 20%. Tribunals, again, this one also there was quite a debate when we made to make it more clear. So the section 13 currently provides that after filing the notice of appeal at the tax tribunal, an appellant is required to file a memorandum of appeal, statement of facts, and tax decision. Those three things we normally file them at the you must come up with a memorandum of appeal, statement of facts, and tax decision. And the bill proposes to require appellants to the tax appeal tribunal to submit appealable decision instead of the tax decision. Other documents as may be necessary to enable the tribunal to make a decision appeal in addition to memorandum of appeals and statement of facts. TOT, again, taxpayers will be required to deposit 20% of tax in dispute at the KRA or equivalent security before dispute, keeping a decision of the tax appeal tribunal. As you know, the processes will always start with the assessment, compliance assessment. It moves to objection. Then from the objection, it will go to TAT, and then through the ADR. Yeah. So once the ADR has come into place, if you're not able to agree at the ADR, then you still proceed to it to the full end. And then now again, if the TAT confirms the position of the commissioner, then now the only option that you have is to go to the high. Going to the high court now to appeal the decision of the tax appeals, to propose to pay 20% of the tax in dispute. Again, another debate. What we are asking is there going to be fair? There's going to be fairness, justice, because when we do this, it means that we're not able to raise the 20%, then you will not be able to get justice. For some of these processes, you may present your best, but you disagree. But then the higher apex court may look at it otherwise. But now, if you're that 20%, then it means most people will not now appeal this. Just end there, because 20% of what is disputed, suppose it's 100 million, then 20% of 100 million, we're talking about. So that 20 million at that point, you don't have it. What do you do? So timeline is also there, set for you, which you can appeal. You can now appeal it to the High Court. So looking at the time frame, which is also available, and at the time which you are supposed to get this 20 million, it becomes very not easy. The move is set to this incentive per pair wishing to challenge the decision made by the tribunal as the requirements may be attainable to most taxpayers. So those people just stay away. Requirement to pay this or this which would not apply where the commissioner is appealing. Look at this again. See, when the commissioner is the one now appealing the decision of the TAT for having agreed with the appellant, then now the commissioner is not required. So you see now it is also one-sided thing. Once the High Court has ruled in favor of the taxpayer, the commissioner is required to refund the money deposited within 30 days after the termination. So the 20% you deposit with the High Courts will be refunded upon the determination by the High Court. Then the commissioner is expected to fund. That is only when you are successful. But if you are successful, then you'll be asked to pay the 80%, the remaining balance. Amendment of appeal pleadings to include new grounds that at the TAT or Superior Court, Section 56 of the TPA provide that the taxpayer must rely on the grounds stated in the objection to which the decision relates unless the tribunal which proposes to do the discretion of the TAT and the Superior Court to add, so that the parties can now only rely on the grounds without exception. So again, there has been also that complaint that, okay, now I'd already filed I've already done my submission at the evidence that I provided. Then now moving to the next level, it was at the discretion of the TAT and also Superior Court to add so that the parties can now only rely on the grounds without exception. So, and again, discretion has also been moved. Proposal has been made to remove it. Objection, validity of notice of the objection, Section 51 provide that where a notice of objection lodged by the taxpayer has not been validly lodged, the commission shall inform the taxpayer within 14 days. The bill proposes to empower the KRA to request the taxpayer to submit information in a notice of objection within 7 days. So look at that again from 14 to 7 days after notice of invalidity of the notice. Also, if the taxpayer fails to provide the documents or delays provided, the commissioner may take an objection decision within 6 days. Alternative dispute resolution, that is the idea. Settlement of disputes out of court or tribunal, Section 5 of the TPA provides that any dispute to be settled out of court must be settled within 90 days. The proposal bill proposes to extend the timeline. Yes, you'll agree with me for those who normally take matters to the ADR. You will agree with me that 90 days is not enough. So you get to, the first the first hearing, again, the next one is now you are told to both parties serve to each other. And the timeline goes very fast. Within 90 days, the matter is still at the TAT has not even reached anywhere near now the hearing of your matter, and the 90 days is over in the ADR. So at times you have also where the commissioner at times may not be moving fast, or you may not have the documentation required in good time. So 90 days was not that good, but now the proposal to have it at 120 days, that one will be more welcome, so that it can give you more time to canvass your matter through ADR and bring it back. So immediately, the matter is at the TAT and you're at ADR, then you can still be given a time frame to discuss ADR. Capital gains, the bill proposes to bring to tax gains derived from the alienation of shares or comparable interest, including interest in partnership or trust. If any time during the 365 days preceding alienation, the shares of the comparable interest derived more than 20% of the value directly or indirectly from movable properties situated in Kenya. The taxation of repatriated income, those ones we also propose of Tax Procedures Act. KRA will no longer grant relief because of doubts or difficulty of tax on the part of the KRA. So the grant to relief, this one will not be allowed. The proposal, if passed, is expected to lead to an even more aggressive tax authority applying more running battle between the tax and the area. So there's no grant, KRA will no longer grant relief because of that. There's instances where they're saying we've tried to trace this person and we are not able, he is no longer reachable. We've tried to call, with change his physical location, that will not be enough to grant the. So hata ukienda wapi bado utafuatiliwa hadi wapi mpaka KRA aseme huyu mtu ako wapi. So that is what that proposal is. Import declaration fee. The bill has proposed to revise the import declaration fee from 3% to 2% of the custom value of imported goods. So again, import declaration fee has been reduced from 3% to 2% of the custom value of imported goods. Railway development really again, levy again is the bill has also proposed to lower the railways development levy from 2 to 1.5. So that means there is a relief of 0.5% in a move seen as additional cushion. The winners have talked about, in summary, households who are cooking with LP gas can now have a sigh of relief. Talked about interest. The bill also proposes to introduce Section 37E, which empowers the Commissioner to issue waiver on the interest and penalty for principal tax that were due and had been paid before 31st December 2020. For those who have who had interest and penalties and the principal tax were paid, have been paid, so then the Commissioner can now grant them the interest waiver on the way can grant waiver on interest and penalty. They were due and had been paid before 31st December. Where the principal tax had not been paid by 31st December, a taxpayer can only apply for amnesty on interest and penalties on the paid tax that have accrued after December. The taxpayer will propose payment. So if you are cleared principal tax by then, that is the meaning, by then, by 31st December, then now you can go ahead and apply for it. But if by any chance that you had not cleared the principal amount, and then now that you want to clear, then you can now apply for amnesty there. On the unpaid tax, to have approved for this, the taxpayer must propose a payment plan for the outstanding amount and committing to pay all the outstanding principal taxes not later than 30th June 2020. So there's also again relief for those who have debts with KRA. You can seek for waivers on where it is applicable, or you can enter into a new payment plan, but which must end by 30th June. Taxpayers who have huge tax debts will get a chance to get a waiver of any accruing penalties. Taxpayers that had declared and paid their principal tax liability for up to December can rest easy, as Kenya Revenue will be required to refrain from collecting the interest and penalties from such tax. I think this is a big gain. Those who are aware of, you are aware of those huge, what we call will carry, and some principal have been put and been paid. Either you are told that pay the principal, then apply for interest, waiver on interest and penalties, and there has not been any communication on this thing. It has stayed over some time, I know, if I can remember. And then all of a sudden, sometime last few months ago, there has been a lot of yes. Yes. Right. Sorry. Call me back later. Sorry for that interruption. Then yeah, we're just saying that people applied for this waiver on interest rates and penalties, and then yes, it has just been quiet. All of a sudden, they just said, okay, rejected. A few have been approved, yes. And again, silently, they also say 40. Most of us must have also heard about the 40-60, where they are saying, if you are able to pay all your what, you pay the interest and the penalties, you pay 60%, then you can get a waiver of 60%. This is also, there is also a communication going on. But I think this one, that the anticipation of the current bill, which if proposed, then it will undo. So they wanted to get to collect before this bill come to an act. And I think all the same is a good move for both the commissioner to collect and also for the taxpayers to get a relief on those taxpayers. Because most of those debts that we talk about in the future, so most of it is in terms of interest and penalty. Taxpayers can look forward to the reduced excise duty on telephone, that is, and data services, which will go down 15% from 20%. Excise duty that is charged on money transfer services by banks is also set to reduce 20%. This is just to encourage more money transfer. That's also that money, because they will be having the audit trails of how the money is moving. Winners, again, taxpayers can expect to reduce prices from medicine. That one is taxpayers can look forward for faster refund of unpaid. Those are the wins. The proposal provides specific time, 120 days for carry out finalized audit for the purposes of the refund. Yeah, so this has shortened the period. The losers, VAT on petroleum, previously for the motorists, the losers of this, and not even the motorists. This is going to affect all of us, almost everybody. We will have a situation where fuel prices goes up, then everything goes up, go up. It will not only affect motorists, but also taxpayers will also feel the pain in introduction of the mandatory computer. Already there is a cry here. I'm a teacher in a rural home. I am leaving my home. Why again trade my pay slip with 3%? So those are some of the issues that it goes through. Then we will have 3% again. Basic salary. Tax appeal tribunal will be required to deposit 20% on the amount that one. Again, here to the commissioner and a loss to the taxpayer. A bill proposes to increase excise duty on money transfer service by seller phone service providers from that 12% to 15%. So when you're transferring money, once this thing goes through, remember, when you send money, the cost will be to the excess duty that is being introduced, meaning the ordinary pay will also have to bear with this. If the sugar prices, people are late and crying already. So again, another one. The taxpayers who engage in betting or borrow from digital lenders may also be hit significantly. Again, we've come to the end of that presentation. I know the timeline was that short, but I tried to pick on issues that we wanted to bring to your attention and those from part of our discussion. I want to say thank you who are listening to my
Thank you so much, CPA. I think you have been able to dig fairly deep into this topic, and you have been able to bring out key concerns that our audience was looking forward to understand. In as much as our time frame for the webinars is quite limited, I think you've managed to bring out quite much. So at this point, I wouldn't want to say much, but rather I would like to welcome questions and discussions.
Good, thank you. We can now welcome.
If there are any discussions or questions,
Yes.
feel free to raise your hand and then we can give you a chance. Alternatively, if you're not in a position to speak, we can still get your contributions on the chat section. Or Emmanuel says the name financial has been misspelled in the certificate. Okay, I think we will rectify that as soon as we can. Most people are saying thank you for the presentation and they would like to get a copy of the slides. I believe our CPA will share with me a copy of the slides, which will then be given to your emails, the mails you used to register for this particular session.
Yes, that one we'll share.
Yeah.
The slide I will share with you, then you can be able to make it available to them.
Thank you. Now there was a question on Q&A section. Hilary Kiprotich was asking,
Yes.
what happens to those who do not need houses? That's for the housing. What will happen to those who do not need the houses?
Yes. Yes, so that question, the debate has been there, and that is why people are saying, why give me the house when I already have the house? Why deduct from me when me I have the house? So when this proposal is, it has been made mandatory, that the word they are using is mandatory, not voluntary. So there's no issue of you don't need. What they are saying that the people of Kenya need housing, both in rural and also in urban. That is why they're saying they are focusing the urban and also the rural to come up with the settlement scheme in the rural areas. So they're saying those who will have not benefited, again, they are saying they will be either they can nominate those who can benefit, or they will be funded after 7 years. So that is the position, is mandatory.
Thank you. So I think Hilary, your question has been answered. If the bill is if the bill goes through, then housing issue will be mandatory. I'm still scrolling through the chat section. I'm not seeing more questions, but if there's any, I believe Teresa will be able to share that. Now, don't leave the session without clicking on the link that I've shared on the chat section, because when you leave the session without clicking on the link for the certificate, you won't be able to get the certificate. So just go through this chat section. If you can't see the unique code and the link, I'm pasting it again. There it is. So utilize it to get your CPD certification. Otherwise, I want to thank all of you for your patience and your choice to engage with us, partner with us to learn through our noble initiatives and the professional webinars that we share every week. And also I want to recognize the resourcefulness of CPA Kumu, who has been very resourceful in ensuring that most professionals are well trained in matters tax and finance. And we hope we are going to meet him even in our physical trainings that we conduct, both regionally and internationally. For those who have not been able to train with us before, you can visit our website. It's www.capable.com. I'm just sharing the link. You can have a chance to look at the upcoming physical trainings and mobilize your colleagues, teammates to seek for approvals and attend our CPD programs that have impacted professional lives of many people. So I'm still scrolling through, I'm not seeing any other question. That means we are good to go. And at this point, I would like to officially end this session with a reminder that we'll have another training next week. And I've just pasted the link to our website, which you will use to register for the upcoming webinar next week, similar time on a Wednesday. So thank you so much for your time. And thank you also, CPA Okumu, for delivering to our delegates. So at this time, you are at liberty to exit the session and shift gears and attend to your personal schedules for the afternoon, as we look forward to another session such as this, where we will continue to learn and discuss issues that affect our lives. Thank you.
Thank you so very much, and thank you to Capable for the opportunity you've given me that share with people about the finance bill and taxes that are proposed. And we love to do this because this is a contribution, and as a professional, we feel most honored if we are given chance to share with our colleagues this kind of bets rather than just also talking about them and also bringing the public knowledge. So we want to thank everyone, those who attended, the participant. Thank you for your time listening to us. At Capable, thank you so much. Bye-bye for now, until we meet again in other sessions, which again we always train public finance, mostly, and public debt. So those are the areas you can find me always training. Bye-bye for now.
Thank you, CPA. Thank you, everyone.